have a late test tonight, so got to get ready for that. But yeah, so I mean, this is somewhat of a simple stream, but I think it's one of the most important things to know in your day to day trading for sure. These principles work in every time frame, and you'll hear the stuff that I'm about to go over, and you know any part of any trading world, whether it's forex or crypto or stocks, it's all the same. So yeah, Snowflake. I don't think he's gonna be here. um, but so yeah, so I mean, I don't really have a PowerPoint or anything for you guys, just because it's pretty simple. But I do have a picture that I'm gonna pull up here for y'all. I hope you can see it okay. I know it's a little zoomed in, but um, I think this is a great picture just to get some sort of visual representation of what support and resistance are. I like to teach them as if you think about a building, you have floors and ceilings. And when you break through a ceiling, well, then you now have that ceiling is now going to be a floor. And you can kind of see that here. When a resistance, this red line breaks, it's now a support or a floor. So, they go vice versa. Sometimes on resistance, you'll see that, you'll see pullbacks. That's where reversal traders make their money. That's what they do. They look for extended moves down into support to then be buying, or extended moves to the upside to be selling, or price usually does bounce around. So I'll kind of give examples on how I draw my lines, what I look for, and then also how zones come into play, because you're never going to have a perfect price level that's respected, to the penny. Ideally, on rare occasions, you do have that perfect spot that you'd like to play out of. And that's where you get some really good trades. But for y'all that know me, I'm more of a breakout trader. So I actually look for the resistance and supports to be broken for a further move, because when a resistance is broken, people that want the price to go down, or shorts or sellers, they have to buy to get out of their position, along with buyers who are trading the breakout like myself are also buying. So you get that nice squeeze there, and then it's vice versa for the downside, right? Buyers have to sell to get out, and people that are also trying to play it to the downside are also shorting as well. So the same principles apply. I will say that bigger time frame support and resistance do mean a lot more in the grand scheme of things. You're kind of zoomed out, kind of a bird's eye view on the stock, and you're seeing where price reacts over a week or a month or a year or multiple years. That's when those levels do mean a lot more than if you have just a 1 or 5 or 15 or 30-minute support or resistance. So bigger time frames definitely mean more, but bigger time frames, the reason that they mean more is just because you're seeing them from a further out view, and there's going to be bigger money traders and institutions and hedge funds, and just more money in general, are going to be looking at these more significant levels rather than on a 1-minute chart. So if you guys want to take a picture of this or whatever, it's also going to be recorded and posted in the chat. But this is a good one. If you just go on Google and search up support resistance, you'll see a bunch of pictures. And they're never just simply horizontal flat lines. Sometimes that's kind of where patterns come into play. It's really just where price is respecting and price is kind of bouncing off of. That's what support resistance is. So let's get into the charts here so you guys can see. I'll give an example on when it's not just perfectly flat, and I think Apple's a really nice one here. And for you guys that missed Apple earnings, they didn't do that well. So nothing crazy significant. Like, they didn't just miss expectations by a whole lot, but they were under on a couple things. So yeah, stock's down. But back to what I was saying about how you can have those trend lines that are kind of diagonal and not just horizontal. And here's a great example. Later, Matt. Thanks, man. But so yeah, so this is kind of a bull flag. So I mean, if we broke over this 180 level, I'd actually be looking for some sort of move over a couple weeks to the upside here. And now with earnings, we're going to be sitting around 170. We may even be lower come the open tomorrow. But, the bottom of this is looking to be around, 165 is going to be an obvious support, right? You see price bounced off here on this daily chart. But we also then have that downward diagonal line here for the bottom of this bull flag, which then plays out to be around 160, 161. So maybe price over time will come back in this area and either bounce or break down. So, you never know, but it's always good to have this stuff in place so that okay, well, we have this diagonal line here, and we also have a nice whole number 165 support that price has previously respected. And that's kind of where you want to get a little iffy on the short side, because, in looking in the past, you see that buyers actually do come in and scoop this up around that level. So if I were day trading this, I'd definitely be hesitant, or I just wouldn't even touch the stock to the downside if it came into that area. So, I think my zones on SPY are going to be a little bit better for you guys to see. So like I said, support resistance, it's not always just a specific price. Sometimes it's an area. And zones, I don't use them a whole lot, but when I do, they tend to work pretty nice. So let me just scoot this zone out a little bit further here so you see why I have it. You can tell price came up in this zone, chopped around, and then fell out of it. Back up in it, chopped around, and actually broke out of it. So the top and bottom of a zone are also support and resistance, right? These levels still do mean something. But the reason that I put a zone there is because price comes into it and then usually ends up consolidating. And I don't really like to be trading in a zone like that. I wouldn't be scalping a name that's sitting the side of a consolidation range or zone or whatever you want to call it. And if I were to trade it, and I have done it before, I would trade reversals. So, I think I have one on NVIDIA-ish. I used to have a zone here. I didn't take it off because I was actually trading it one day and I didn't want that green background. But you can tell that price comes into this zone here and bounces. It's done it. One time here we actually rejected, came back down. This time we broke right through, but we came back and retested this zone. Bounced out, retested the resistance here, which is now going to be support. Buyers came in. You see that nice move. Sold back off into the zone, launch pad out. Fall back into the zone, launch pad out. Fall back in. We came down, tested the bottom of it. We actually broke under it, but on the daily chart, you can see this wick here the other day on NVIDIA, and buyers just came in and swooped this thing back up. So we're now launching back out of this zone again. So definitely something interesting to watch. I don't want to put a ton of these boxes on my chart here, but you can kind of see that maybe this is another zone as well, where price comes up into then falls back out of. And these are just supply and demand zones, right? The bottom side ones are demand, where the buyers are, and the supply is those zones that are above, where you see that supply and that selling pressure on the stock. So pretty simple, but definitely useful. This box here, this is actually not a supply and demand zone. This is just so I can see where the gap is from that old earnings run up. So if price ever does come down in here, and you guys can see that I have an alert sitting right here. So I am on top of it if, I'm not watching it on one day and we actually come down into this, this gap. So disregard this one as a supply and demand, but this one is a key one and it's respected it very, very well. So are there any questions on that? I think that's pretty straightforward on support and resistance. I know it's a little quick, but it's a simple concept, but if you don't understand it and don't know how to use them, it's going to be detrimental to your trading. This is also not a zone. This is just me marking out this gap here on Tesla to the upside. So if Tesla keeps this momentum, I'm going to be all over it. We caught a decent trade on it this morning and then just kind of slowly grind it up, unfortunately. But still a really, really nice trade in the first 15 minutes today. For any of you guys that missed the live trading session, it was really great. But yeah, but then again, something else to consider, like I said, on these diagonal lines, they can kind of go out for a while here. So maybe we get through this zone and we come up and test this around this 250 level, right? So 250 is going to also be some sort of resistance there as well. And then you also have that downtrend. So it's easy for that to reverse off that level. But the way that I trade is if we can actually break through that level and you start getting that short squeeze and a lot of volume comes into it and a lot of action, that's when I'm looking to actually trade a breakout through this level if that does happen. So same principle applies for Apple. We have this resistance here that's on a downward move. If we can then break that, for you guys that have been at my chart pattern lessons, you understand that, because if we break, we actually may get another leg up to all-time highs. So pretty good, pretty good. Again, it's kind of hard to go on about this for a long time. It's pretty straightforward, but I hope you guys all are understanding this. I'm not seeing anything in the chat so far, but yeah, this applies in any form of trading, swing trading, day trading, crypto, forex. Like I said, it's a universal rule, and it plays into market psychology very, very well. So you always need to keep this in mind. And another thing that goes on with this is like whole numbers. You guys hear me say, okay, well, like on Apple here, for example, 179 doesn't mean as much as 180. It's a weird psychological thing, but you'll see more action, more volume, more orders sitting at the whole numbers rather than those kind of $1, $2, $3 levels. But 180 means a little bit more than 185. 200 means more than either of them, right? So it's the more well-rounded the number is, the better. So let's see, Trio. How does this apply after or pre-market move, especially in the context of day trading? So, pre-market, there's just very low volume, right? I don't necessarily look at. So, I mean, today on Tesla, for example, this is something good we can go over here actually. So, the pre-market high, I'll mark it right here at 214.25. So that's going to be the pre-market high. But today off the open, right? So where it's light gray, that's where the pre-market is. And where it's dark, that's where market opens. This is the first candle of the day. So the high of the opening candle was 213.78. See if I can get it right on the dot. Boom. So that white line there is going to be the high of the open. So that's going to have a little bit more significance than the pre-market high. I definitely want to know both levels just so I know that those are kind of like those circuit breaker points that if price does get through, you'll see some sort of move, and it just kind of helps keep that momentum going. So this morning, I wanted to see this kind of pull back. It did. Once I saw that momentum kick back in here, we got over VWAP. We got in kind of right here before the high of day. This is a perfect example of that opening range break that I've gone over before. We're just simply breaking through the opening range of the first couple minutes. And so we had this 213.78 high of day. We had the 214.25 pre-market high. And then we also had the whole number of 215 that I was looking to kind of sell once we broke that, if we could actually get through all these levels, because we would have caught about a $2 move there, which is great for 2-3 minutes. That's I can't really ask for much more. So all those levels do mean a little bit, and that's kind of why I had them all marked out. And it works great. It just boom, got through, more volume kicked in, and then you can also use these levels as support and resistance. Again, they're not going to mean as much as these higher time frame levels, but they will mean something. Another thing that you could use is opening price. I know a lot of traders that do pay attention to the opening price. And if, right here on a Tesla is a good example. We open, we push up, and then we fall back under the opening price. We test the opening price. Yeah, not exactly, but it's still just the idea of this level here. Test it again, fall back down, ended up bouncing, got above it, closed above it, tested it here on this wick, closed green, and then boom, you see the momentum pick in with high of day, pre-market high, and 215. Does that make sense to everybody? I don't need any more lines on my chart. Trust me. It's hard for me to think of questions, but listen to others and they ask a question at times. Sweet. Yeah, Snowflake, 100%. Y'all ask questions now because pre-market, it's all business. I'm struggling with understanding all of this. Supply and demand didn't do well in school. Well, let's see. Just think about it as demand is buying, an area of buying, and supply is an area of a supply of shares. So when there's more supply, there's not enough demand to keep it moving. And when there's more demand than supply, price would then go up. If there's more supply, then demand, price will go down. Yeah, no, all good, Stick Man. Ask away, dude. Let's see here, Mr. Happy. Can you open the Apple chart? Sure. Here you go. What do you want to see? That's all. Thank you. Oh, okay. So Apple's sitting about 172.24. I mean, not a grand scheme of things. This thing isn't down that much from close. I mean, still down about $6-ish. But if I was a betting man and I was forced to take this earnings trade, I would have been all over puts for sure. Y'all have heard me talk about what I think on the iPhone and all that. But actually, so when they divided up the numbers, if you guys were at the Apple live stream, you heard this, but the iPhone revenue beat just barely. MacBook revenue was under expectations, and then accessories like AirPods, the VR thing, all that stuff was very much under the expectations for what they thought the revenue would be. Stickman, I don't know if you're a lifer or not, but dude, I'm more than happy to do a one-on-one with you. Just let me know. Okay. I'm not. Yeah. So when you do, if you do, reach out to me and we can have I usually do about an hour session with people. I had Trio on here. I had Babu Chris did one with me. And then the Chag did one with me as well, and I think they liked it. So anyways, yeah, I hope this makes sense to you guys. I mean, it's kind of hard. I don't want to just sit here and repeat myself and sound like a broken record, but if there's any other questions, feel free to ask. I can chart really quickly if you guys want, just kind of go over what I'm looking at for tomorrow. Apple's definitely going to be on watch. Me and Bull were talking about the continuation plays on Apple. Last earnings was over here, and let's just make this a little bit clearer for y'all. Last earnings was, they fell down, and then you see a couple day continuation out of this, and it actually fell another $10-ish. So I think that we're gonna probably see some downside continuation tomorrow. At least that's what I'm gonna be looking for. I don't really want to play any sort of reversal on that. I will definitely be watching Tesla as well. I really like the action I'm seeing recently. I want to see if it can get back over 220, and then I'll probably look to trade this into 225, 230, and then we have that $10-ish gap above that I'm going to be looking at. So as long as the market kind of keeps some strength here, I'm going to be interested here on the upside on a couple names, NVIDIA as well. Kind of just bouncing out of the support here. I think, maybe 440 is a decent trade, maybe 450. If we can get all the way up, like 475, 480, I'll be on that as well. I know that's kind of far-fetched, but could be good. We're going to be live trading tomorrow. No, I'm not actually. I won't be live trading. I'll be in the chats for a little bit in the morning. And then I'm actually flying to Oxford, Mississippi for the Texas A&M Ole Miss game. So I'll send you guys some pictures. Should be fun. Yeah. But anyways, yeah. So NVIDIA, Tesla, Apple going to be my main watches here. Meta was actually really weak today. So if the market was weak, maybe there's some momentum trades there. Let's go through. Netflix is trying to break back up here, but it's just not the cleanest name ever. I kind of want to be when trading it when there's a good catalyst or just an absolute A+ setup. Other than that, I'm not willing to risk my money on that. And I don't want y'all to risk your money as well. AMD just kind of sitting here mid-range, but it looks like their earnings were pretty decent, so they had some strength. Maybe that's what helped NVIDIA bounce out of this. What was the other one? I know Square did good on their earnings. They're actually up in the 50s now. Let me throw this in the 4-hour for y'all. So, yeah, really nice move. So maybe there's something there for us tomorrow. Let me throw this up on the side. And then Roku did really good today, so I'll be watching that as well. Let's check out Roku on a bigger time frame. Yeah, so I mean, no A+ levels to really, and here's a good example of when you can kind of draw a zone. You can just kind of see price comes into this and rejects it or chops around in it. So we're now in the middle of this. So big time frame. Am I loving it? Probably not. What else? Let's see Square on this time frame. So you could maybe say that this is somewhat of a zone here. So we still have some room up to it. Let's see. How did PayPal? So you always kind of want to look at PayPal and Square together because they're going to trade off each other. So PayPal also has this kind of chop zone above. But the day after earnings, let's see. They actually came out after hours yesterday. Opened here, fell all the way down. So I don't know. Maybe Square actually just pull back tomorrow after the open. Can you open Chewy? Never traded this before. Let's see. It's just kind of sitting flat here. What are you liking on Chewy? I'm not seeing any earnings anytime soon. Their earnings are December 6th. Oh, yeah, December 6th. So we still got some time on that. But yeah, guys, that's really all I got. If there's any other questions, throw them my way. If not, we'll make this short and sweet. I'm going to get back to work. Yeah, looks like Chewy's down pretty bad over the last couple of years, but it's always time for it to come back. Is everyone understands support and resistance? I think it was pretty easy, but with time, you'll kind of see where you can draw them yourself. This is a game of making mistakes and learning from them. So try it all, and then hone in on what you're good at. Reckle, so what's hard to see for you? Just kind of where you want to draw them, where you want to draw the lines or the boxes. Is it the lines or zones or both? Zones. Okay, yeah. And zones aren't going to be like the biggest most important thing. It's and I you can never really draw a zone perfectly. But I would look for consolidation. That's where you're going to want to draw zones. So like when I looked at PayPal, I see a zone of consolidation here, and I can see that price came in. I see the consolidation, so I look to the left of it. Okay, price bounced off it here, and I look left even more, and I see that price bounced out of it here as well. So I'm like, okay, well maybe that's some sort of an area for a zone. It's never going to be perfect, yeah. So I mean, that's really it. And then I go over to Square, and I'm like, okay, well let's see. Here's some sort of a zone here. Price seemed to chop up and slow down there. Let's look to the left. Well, price bounced out of it here, price bounced out of it there, price bounced out of it. So I can draw this zone all the way back here if I want to. So it's, again, zones are never perfect price levels. It's just an area. And then, you can look for the same thing on the upside here. So, I mean, I see a zone here, right? I'm like, okay, well, maybe that's a zone. And then I move it back here. Okay, well, maybe things chop up a little bit in that area. Not the cleanest thing in the world, but when price comes up to this area, I'm not going to be interested in trading it here. I'd be interested in trade it at the top of like a breakout of that zone. Or if I'm a reversal trader, I'm actually looking to short in this area for it to fall back in. But first, you got to get through this zone. And since this zone is above, it's going to be supply. If the zone is under you, you're going to have support. And then, look, I can go on a smaller time frame as well and say, okay, well, this is probably a zone as well. Price chopped in that for a while. I see more of a triple bottom type of play that fell through. I mean, the same thing applies. You can also say that you see a head and shoulders. It's all just the psychology of the money moving, right? You could say, okay, here's one shoulder, here's the head, here's the other shoulder, and this zone here is the neckline or resistance or whatever. And then, I draw this zone here or whatever, but look how nice and perfect almost price respected this 55 level here, this red line. It bounced perfectly on it here. It barely broke and bounced there, bounced almost to the penny here again. And then look, we broke right whenever we actually gave up that level for real. Boom, breakdown, couple day consolidation, got smashed. So zones are, obviously just more of an area. And then those resistance lines are where I'm going to be more interested in trading day to day. Yeah, I mean, you need to understand price movement and volume kind of more than you need to understand this stuff to a T. But again, it's just experience. You're not going to learn it in one day. Watch this stuff for a year and come back to me. And if you don't understand it then we may have a problem. Yeah. Say we're trading today in the morning. Do you use the aftermarket or yesterday for levels or just the pre-market of today for the opening movement? Well, so I would never use after hours levels. Well, it depends. Like, let's say that I'm just going to zoom in way over here. Let's just say that Tesla, like opened here, fell here, and this red line is the close, right? But after hours, it fell down to this 52 level. And we opened the next day here. So we gapped up. And Tesla kind of does something like this, something like this. Well, first, I'd be looking for the low of day, right? The low of the open. And then, you could have yesterday's after hours low as just a level to have in mind. So, you could put some sort of level here as, after hours, because maybe price comes down into this level here, bounces a little bit, kind of has a little H, and then you see it break through. So it's definitely good to have those levels mapped out, Trio, but the after hours and pre-market levels aren't going to mean as much as the actual trading day levels. That makes sense, Trio? Cool. So it's always good to you see a mitten. Yeah, kind of. So it's good to have those after hours and pre-market marked just for a visual on where those levels are, because just like today on Tesla, those levels may not mean the most, right? The pre-market and the high day may not be the most significant things in the world, but I like to have them marked out so I know, okay, if we can get through here, okay, we're about to push pre-market high, great, boom, we broke pre-market high. Looking for 215 next. So it's just like, it's just levels, floors in a building that we need to get to until we've reached our destination. And then, obviously the low of today is something I'd be looking at for an opening range low, for an opening range break as well. So I hope that makes sense for you guys. Got any other questions? Breckle, you squared away? Stickman, you got anything? Your brain hurts. It'll take time, man. It'll take time. I know I kind of go fast here. I've done this for a while, but all you guys have free reign to DM me on the side. I promise you, maybe go back and watch this a couple times, then have your own chart up to the side and try to do it yourself. But the basic way of thinking about this is look where price is bouncing, look where price is respecting a certain level. I would focus more on just the simple support resistance. Just try to find a price that it's respecting and bouncing off of whatever, and then later on maybe get into zones. Zones are something a little bit newer that I've been using simply just because of the market environment we're in. If we're in a straight bull market, I mean, I could use zones as maybe buy points or whatever, but I'm more of a breakout guy. I don't really like to trade reversals, but when good setups come, I'm kind of mad I didn't pull the trigger on Tesla. Talked about it multiple times, buying it at 200, and I also talked about Nvidia buying it at 400 multiple times, and I didn't do it. And Nvidia moved 10%, so sucks, but it is what it is. Do what you're comfortable with. Today, I was one and done in the first 15 minutes and just couldn't care less about what the market was doing. So keep it simple. It was just simple levels and catching momentum. Right, you lose some, you win some. Just make sure your losers are more frequent or bigger than your losses, and you'll be fine. But yeah, guys, that's it. I think you guys are all good. So I'm going to wrap things up here. And again, feel free to DM me and we could talk about this further. But unfortunately, I got a test I got to get ready for. So have a good evening, everyone. Thanks for showing up. And I'll see you guys in the chat tomorrow morning. Yeah, thanks, guys. Take care.